What is good? What is good? I'm gonna start out. I'm gonna backtest today, and like go over like what I saw, do my annotations for today, and then I'm gonna go in. I'm gonna backtest the whole week, do a little weekly profile. Then I'm gonna create a video on both those while I'm live. So that's what I'm gonna do. And then after that, kind of just continue where we're at in the 2023 mentorship. We're at March 9th in that mentorship. And as we see today, I was live earlier. I was low key. I was gassed. But as we can see, overnight, what do we do? What do we do? We have low resistance liquidity. We have this trendline phantom. We've generated all these lows, all these lows, all these lows, all these. They're failing to get taken here. And then we originally come down, push lower. We take this low, then we come back up and actually take this high. So we have a seek and destroy Judas. Market actually opens right here. We take sell side. We've taken sell side. Then we come up. Then we take buy side. So this is where the manipulation occurred. Right here. You have the manipulation. We have a 15-minute imbalance. Once we displace through that, we use that as inversion. And let me see if I can take off some of this. You see how well we respect that as an inversion right there? Inversion. And then as you can see, kind of some little high resistance conditions straight to this low. You have sell side that resides within that. And then you also have that higher time frame sell side liquidity pool that we were hovering right above. These two equal lows here within that daily imbalance. Some high probability liquidity that we come back down and we take that. The fact that these lows were engineered right above that tells me that we're likely going to come back down and displace. I mean, again, the same kind of thing. We left equal highs today. We left equal highs. Yesterday and today we left equal highs, but the market doesn't have to take those if the manipulation already occurred. In this instance, we've taken buy side here, and we're still holding this imbalance. And then we have all these lows right here, low resistance, low resistance, low resistance. So what's more favorable, in my opinion, coming back down to these or displacing to these lows instead of coming all the way back up and flipping after we've already taken buy side here. And that's what I kind of want to get a little bit better at. And I'm grateful that yesterday kind of taught me a good lesson. The fact that, like, hey, it doesn't really matter about equal highs. Like, if we already had manipulation and we have quote unquote momentum, like, the market's not just going to immediately flip momentum to come back up to buy side. So here, in this case, we had SMT, we have displacement, and then we have a retracement. This is less likely to be a reversal since we've already had that displacement to show that institutions are on side here. So we have displacement and then not going to be reversal, or less likely to be a reversal. And that's the uncertainty as a trader that should be embraced or should be respected. That's why we have risk. That's why we have stop losses. If this displacement has happened and then we reverse, we're likely in seek and destroy conditions and likely don't want to trade that. Let's look at another day. Here, manipulation occurs here. We take buy side. We have a nice wick here. Boom. It's more likely that we head to sell side liquidity than it is to reverse from here. And this is, I kind of want to, like that 9:30 change to delivery that I had a video on. And I do want to backtest that actually maybe today, dude. But 9:30 change to delivery. This shows the overall momentum. Usually we'll have that manipulation around 9:30, centered around that Judas. Big wick on the 15-minute candle at 9:30. Okay, we're likely heading to sell side here. More likely are we heading to sell side than we are to head to buy side up here. Let's see this. 9:30. In this instance, 9:30 we have whipsaw here. We have whipsaw. And then 9:45 we get this. And then we have a change in state delivery here. Look at this wick. Comes back and closes above this candle here at 9:45. Where are we now likely to expand to? Buy side liquidity. And here, where's 9:30? In this case, the manipulation happened at 8:30. What do we have? 8:30, we have a wick that closes back inside of sell side liquidity. We then have a change of state delivery here. This now becomes the order block. And then we end up displacing to where? Buy side. Here, same thing. We take buy side. We have a wick close back within the body. And then we're waiting. Right here at 9:45, we have a change of state delivery. So if you can just align yourself with that order flow, more prone to be right than wrong. Order flow, order flow, order flow. Okay, let's look at this day. At 9:30, we end up having a shallow rate of sell side. 9:30 closes back within the range. In this case, we're already close to the draw liquidity here. You have change of state delivery here. We're very close to that buy side. So we can wait for maybe 10 a.m. 10 a.m. We're not really going to sweep. We do have a change of state delivery here that we respect. And here we go. We have that sell side back within the range. And then displacement with order flow. Rinse and repeat. We have buy side taken here. This could have mounted into a loss. This could have. That's why you want to see confirmation on the lower time frame. Here we have buy side taken back within the range a little bit. And then we kind of consolidate, come up. We take buy side again here. Back within the range. What are we waiting for? Change of state delivery. 3 up close candles right here in a row. Or you could use these up close candles in a row. I'm going to use these 3 up close candles in a row. You have constant encroachment of this wick here. And look at the bodies. Look at what we respect. And then we're in line with order flow here. The order flow model here. Okay. 9:30 comes down, takes sell side liquidity here at 9:30, goes back within the range. Here we have a change in state delivery here. Then we come up to liquidate these highs. So in this instance, we're very close to the drawn liquidity. So therefore, we're prone to have a 950 reversal. And then we come back. And then maybe 10:30, 11, there's a better trade to be looking for. But here, same thing. Oh, look at the bodies there. Look at the bodies respect that down close candle. I do want to look at this. I want to see like what type of here 9 a.m. That's sell side liquidity taken. You don't really have anything in my opinion. There's nothing there. Shift in market structure here, no imbalance. Here, this is pretty muddy. This is pretty fickle. Here though, we have buy side taken, shift in market structure, fair value. Kind of have a 2022 model. And you have sell side taken here, shift in market structure. There's not really a retracement into a fair value gap. We have this inversion right here. Overall, kind of fickle PA there. Days when it doesn't matter to be on side, or days it doesn't, like every day is not a trading day is what I'm trying to say. And here, this was NFP. I remember we have a big dealing range established. We have whipsaw at news. Can map out your DRT levels. You see here, we displace above equilibrium. Well, actually, we displace below equilibrium first, so it's not a good example. Or wait. This isn't a fair value gap because we have this news candle. So, yeah, let's see here, we displace above equilibrium. We create a fair value gap above equilibrium, showing that we might want to displace higher. And that's what ends up happening. 9:30, as we can see, there's no nice manipulation here. We fall short of this imbalance too. This would have been a void profile, a void day. You know, it kind of happens. Here, kind of same thing. We have 930 expansion. We come in here, take buy side. No change in state delivery. No change in state delivery. Continue with order flow. 930. We had SMT here. Then we draw into the higher term PDA. We had SMT there. Change state delivery here. Buy side delivered. 930. Come down. Sweep this candle low. Change state delivery. And then buy side taken. And then PM. We hit that 4-hour order block or whatever. Displacement. I also do want to go over previous journals while we're at here today, because I think that's beneficial. Kind of burn that into my brain, you know. Wait, I don't. Yeah. Okay. Let's enough with this. Okay. So here we have 930. Manipulation. Has occurred when there's a change in state delivery. We can trust that. I can trust that to be aligned with the underlying order flow. Engineered sell side above a larger fund level pool of liquidity. Here we have a trendline phantom, low resistance signature. Order flow strings together. Look at the bodies. Here we have change state delivery. I feel like I need to make that a different color, the SysD. What color should I be? Yeah, I feel like it has to be black. What do? We support down close candles. Oh, yeah. We do not need to take this high to establish a bearish narrative. Sell side taken. Sell side taken. Weekly objectives taken on a Friday. this is pleasing to see happen live, and I am content with this week as a whole. This is why I don't like the expectation of TGIF. I do not look for TGIF. Oh shoot, bro. I ain't gonna. Oh shoot. So I gotta. I guess it's not bad. Sorry, I turned chat off, and like I don't. I'm sorry. The reason why I'm doing it is because I'm just here to backtest, and I don't want to like have any negativity in my chat at all. Like if there's a possibility for negativity, I'm gonna guard that and block that. I appreciate you guys though. Like everyone in here is probably chill, but I'm just doing that for my own sanity. I don't expect TJIF because there has to be a narrative behind why price should move to where it wants to move, and I feel like me personally, like I'll just say I'm looking for TGIF just to look for TGIF just because it can possibly happen. But there has to be a narrative to why price is moving, and okay, if that narrative is in line with TGIF, cool. But if I'm coming to the market say, oh, it's a Friday, so we're gonna have TGIF, that's just flawed logic. But if I come in the market and say, okay, we've had bearish expansion this week, so there's a possibility for us to have a retracement back into that weekly range to create a wick. I mean, I guess like if we just look at this, let's see. So for Monday's high, we're just doing range low. Yeah, I personally don't like just looking for TJF. It's pleasing to see. And we also had no news today, so we were less likely to see a big expansion. Forex is still like messed up on my. The body's on the opening range cap. Price respects current new day opening gap. $15-minute inversion inversion. I need to chill. Rejection block right there, where we get a nice market structure shift. I guess right here, that's kind of manipulation. We'll say if we're mechanical with this, market structure shift here, imbalance created here. And then we seek another redistribution leg here within this imbalance. Negative 1 standard deviation. Still a lot of stuff on this chart. As we see, 50% acts as true resistance. We have a stop hunt around equilibrium or retracement. 25% is when we get our lower sell. 75% is when we get our second stage of redistribution. Beautiful. And this low actually is a new day opening gap right there. Let's look at SB. ESPN. Negative 1.5. Then new day opening gaps. Cap the weekly range. Cap it. I do want to measure this. It's good, Dustin. I don't know. Is that like a? Is that a solid PD array? I don't know. The event horizon PD array. A midpoint between two new week. We'll make note of it. I will make note of it in my annotation. The event horizon PD array. I need a darker color. I personally don't like looking at for TGIF. Me personally. Cause like it usually happens in the PM session. I'm not really trying to trade the PM session. It's just something to note. In my opinion. Let's look at the 3 minute first. Come up. You have the original change of state delivery here. Buy side sweat. Oh, the new week opening gap too. New week opening gaps. Distribute price lower. 15-minute inversion with this fair value gap right there with that order block. Come back up. Retracement. Another stage of distribution at that 50% equilibrium mark. Then we get more displacement, fair value gap, boom, straight to sell side. Come back up, reprice that imbalance right there, that inefficiency, and then we seek sell side delivery, and then we close back within that range, and then we pull off that right here around 4. Pretty much the same annotations on the 3-minute chart, but I still want to new week opening gaps. Top of the stood up outside the crowd in the trenches, but it doesn't Alright, this is where I was looking at this morning. I wasn't as locked in this morning, probably because I was live for like 9 hours. I don't think I'm gonna do that anymore in the future. I don't think that's a good idea. We have a lower sell within that imbalance. We gotta have an SMT of some sort that we can cherry pick here, of some sort. Okay, volume imbalance right there. I was looking for possible SMT between 951 high. Nope. Oh, we have SMT with YM. I don't know if I like to have SMT with YM in my analysis. Especially recently too, I just don't think YM's as correlated as it was in the past. Let's look at dollar. Dollar makes a higher high at 10 a.m. $9.20 to 10 is a higher high, so that should be a lower low on indices. Definitely divergence there. I'm not going to use it in this analysis. I don't think it's necessary. Notice how here we're consolidating. There's kind of a lot on this chart. Oh, yeah. No way does this macro offer another stage of distribution. Nah. Macro signatures at work today. And in this case, we end up drawing to this imbalance here. This breakaway gap becomes strong draw on liquidity. I don't think we have divergence at all with yes. Kraken correlation right there. Generated liquidity. Kraken correlation. $250 macro distributes. Market on closed macro pulls back within that range. $250. Okay, I want to capture this consolidation. 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 Deep premium. Back to equilibrium. Notice how as soon as price displaces through that new day opening gap, sensitive fair value gaps, we refer back to that new day opening gap right here. Displacement more because we are in a consolidation. We go from deep premium back to deep discount, back to equilibrium, back to deep premium, back to deep discount, back to equilibrium. Also within this PD array, notice how we have displaced through equilibrium of this range. It's now becomes sensitive, happening right at 1010. Then we end up distributing lower, come back up. Since 950 macro was the consolidation, therefore 1050 macro could be a little bit better candidate for a trade. Here we have 1050 macro. We're drawing into those order blocks and those up close candles. First stage of distribution, displacement, fair value gap right there. And here we have sell side has been taken. Everything here is just a little bit lower probability, but we still have another stage of distribution within a macro. 1250 macro doesn't really do much. Therefore, the next macro could spool. We don't really do much here. We do have a cracking correlation. Smart money accumulates shorts. How do the macros look at where we reprice to at the end of the day? We have a volume imbalance. Any other studies here? Put a low of the day. $11. $12. When do we make this low? 120. Then 235. Then 320. New York AM. Whenever I do like a daily profile, I always switch. Like it's always. I need to find my profiles, but this is like a 9:30 reversal around that. 9:30. We'll say AM. Or we'll say 9:30. I'll just say 9:30 reversal. Key studies. How macros engage price, which fair value gap, or which when we can leave equal highs, why wouldn't TJIF play out? Like technically this is TJIF. Like we're tracing back inside the weekly range. So I don't know. DRT levels. Okay. Anything else to dive into? I feel like that's a pretty solid. Come back up. We have a mitigation here with that break or right here that forms that breaker. Then we break down. Volume imbalance. Volume imbalance. So get ES. SMT here. Displacement. We have that mitigation to come up into that 5-minute imbalance. Then we break down. Ooh. I'll be back. I'll be back in a minute. Negative 1.5 standard deviation. Maps out. I do want to see this. Is this like 0.5 here? This volume imbalance we repriced to. Okay. Do you want to go over this week as a whole? Delete these annotations. Even though it sucks, I don't like deleting my annotations. But first I want to go over like so 918 we had distribution here. We left those equal highs here on 918. Or I was about to say, was this today? No, this was yesterday. We had SMT, buy side taken, shift to market structure, 2022 model, and then we ended up displacing. We ended up using the volume balance and the new day opening gap and that breaker. It's not just a high broken turn support or resistance or low broken turn resistance. It's all these factors around that. End up redistributing around the new day opening gap here. Buy side taken here, shift to market structure, fair value gap, imbalance 2022. Engineered lows right above sell side. We're in a clear sell side expansion week. And then the day before that, buy side taken with that SMT, creating a high resistance signature. We filled trade up to that SIBI, and we kind of just consolidate for this today. So kind of consolidation. Not kind of, but we had consolidation profile for the rest of that PM. On Wednesday, Tuesday, we had a nice accumulation, manipulation, distribution lower, redistribution. Okay, notice how on all these days we originally took sell side. Or not all these days, but we take sell side, and then we have another redistribution after rebalancing to around equilibrium of that range. Into that fair value gap. Here we have manipulation right here, draw on liquidity, immediate rebalance here, breakaway gap, smart money is accumulated short position above midnight open, and then 950 macro distributes. What did that 1050 macro look like? 1050 macro was a retracement up to buy side, and then 1150 macro distributed price lower. Very nice, very nice. I want to be putting like Monday. No, not Monday, no news, but Monday. And Monday, we end up having this original manipulation move on the week. You form SMT, we've taken buy side within a premium, D premium, and then we reprice to a discount. there's like no really retracements here. Weekly profile. When was this? When did we start? As we can see, standard deviation. And this thing's so slow. Well, half the time. I should have just deleted all. I didn't want to take our picture. I didn't want to note the daily chart. Failed to offer support. Okay. In terms of if to look back. We have repriced into a premium. These lows could be a draw on liquidity. I really don't think these lows will be a draw. I really don't. So we've now had, this will be the weekly outlook. Well, we could seek IRL here. Also have these 3 down close candles. I think this will be another just retracement, likely, but who knows? Let's look at seasonal tendency actually. So July, August, we usually have some form of. July lead into August though, we usually create some type of top. So we'll see. Like going into August, we could have some display. I mean, obviously it's an election year. When do elections really occur? I don't even know. We're going to deep dive. We're going to dive into this weekly open, high, low, close protocol. Jeez. Oh, look at the high on Tuesday. SMT, have that SysD, Monday manipulation, Tuesday, continuation leading into expansion. Here's that breaker. That breaker is actually this daily candle here. Oh, bro, this is just beautiful, bro. Screw going to art. Screw going to art school. Just looking at this. Oh my gosh. I don't think I need that gap there. Accumulation, manipulation, and then distribution of this. I'm not going to put these gaps on here. I do want this 4 hour though that I had marked here. Are there any important daily levels? CE of that wick. What are some key studies? Oh, when are we in a trending profile? So here we're likely to draw into this new week opening app. I guess I got a new toy now, the Event Horizon PD array. Oh, we enter that at 9 a.m. So we have manipulation above true day, manipulation above true day, failed to manipulate above true day, but we still distributed. Manipulation above true day, and manipulation above true day. So all these are classic sell days. Is True Week open the midnight price at Monday? That's what I'm pretty sure it is. It's This is when. A rejection block there. And balance. Boom. Distribution. Here we close back within 20 to or we retrace back into 20 to 30% of the daily range, but not the weekly range. All right, that was looking backtesting the week. I think we didn't go like nitty gritty into like the whole like daily profiles because like I've already done that in like the daily action. I'm gonna post this on my Twitter and then might record a video. Man, this log right here is gonna be the greatest thing in history. It's gonna be the greatest log to ever exist. Okay. I want to record a video, a market review. I want to look at DXY's market profile. 230 London low a day. DXY, we've now had a change state delivery. Dude, I don't know. I don't really want to analyze DXY until we left this consolidation. It was so hard to do. It's just consolidation. We're now back at equilibrium. Could consolidate. We could, if we displace through this. If we displace through this now, like for real, I think we're for sure gonna take these highs and these highs. Like real talk. I think that's most likely. All right, I'm gonna record. Welcome back to another market review. Today was Friday, and if you haven't, dang it, bro. Welcome back to another market review. Today was Friday, and we had another kind of sell day. This whole week, we've just been expanding lower. I'm gonna do a little weekly profile video. Probably have that out by tomorrow. But as you can see, we have these equal highs, and just like yesterday, we kind of left equal highs on Nasdaq, but we don't have to take them because the dang it. Welcome back to another market review. Today was Friday. We had another kind of sell day within the market, and this whole week kind of just been bearish expansion. We've had a classic sell week. I'll have a weekly profile video on that tomorrow. But as we can see, we engineered liquidity before market open. Market opens, we come up, we sweep these highs here, we close back within that. That shows that this is a stop hunt. We were respecting this, and notice that we leave equal highs here like we did yesterday, but we don't need to take equal highs to be able to establish a bearish narrative. This high does not need to be taken. We are above true day open. Smart money's accumulating short positions above true day open. We then are respecting this order block still, these two down close candles. We've had that change state delivery here. Look at the bodies. Look at the bodies and then displacement. Here we have another order block, and then in line with that order flow, and then we come up, and then we have another redistribution leg lower, and then we close back within 20 to 30% of this daily range here. Well, we don't close there, but that's where we retrace to. And then, yeah, so we've taken sell side objectives. These lows were engineered right above a larger, higher time frame liquidity pool. I'm not going to show that up on this chart, but you can look at that in your own chart. We engineered these lows right above that larger pool of liquidity. We're likely going to retrace lower into that as we have these low resistance liquidity signature. And this is that 15-minute inversion here. Look at the bodies. And then we have another inversion right there. We only have two 15-minute fair value gaps within this leg of expansion, and they're both influential on the right side of the curve. So here is kind of the 5-minute annotations. I know they're kind of messy, but coming into market open, same thing. Where is the low resistance liquidity? Where's the low resistance liquidity? Right here, we have low resistance, low resistance, low resistance, low resistance. And then here we come and we create a high resistance signature. We have these new week opening gaps that get respected. These green boxes are new week opening gaps. And this yellow one is the current new day opening gap. So that's how I kind of have these. And then we end up having displacement, lower sell, first stage of distribution, second stage of redistribution right there. And then we have standard deviations that I mapped out. -1 right there. Good respected nicely. Then this -1 right there, that fulcrum point gets respected nicely. So here we come up, previous new week opening gaps act as resistance, and then that 15-minute inversion as well. So right here, manipulation has occurred. There has been a change in state delivery. I can trust this underlying order flow that we will likely deliver to this sell side objective right here, and then this higher time sell side objective here. So if I'm just able to get a piece of this move, a fraction of this move that is likely going to occur, then I know that over time this will be profitable. And here, I'm noting here this 5-minute imbalance right there gets reclaimed, and then we have a 5-minute SIBI right there, and we end up selling off there. So a pretty nice sell model there. And then this is ES. We have this opening range gap. We end up displacing through this new day opening range gap, which is from Friday opening, from the previous day closing to today's opening. Kind of meander around in that, and then we displace through that. We displace through new day opening gaps after taking buy side liquidity. What's most likely? We're most likely going to displace lower. And then right here, this is the 50% mark of this new day opening gap, new week opening gap to this new week opening gap, event horizon PD array, which I'm not going to explain too much. I'm just going to be backtesting this more because I personally use new week opening gaps in my analysis. So I'm going to be backtesting this. It's the 50% of 2 new week opening gaps, and pretty much if we displace through that, we're likely going to head to the next one. So Monday, my draw on liquidity is this new week opening gap here. And then here we have these new day opening gaps. We're capping the daily range on ES. We have this standard deviation that we can project from this high to low, -2.5. It gets respected nicely there. Dang, I keep on exiting out. My bad. Here we have 950 macro on ES, or on NQ, my bad. We've taken buy side liquidity. We then have a market structure shift here, pull back, imbalance right there. Notice here, 950 macro kind of consolidates. We go from deep premium to deep discount, back to deep premium, back to deep discount, back in equilibrium, back to, and then we finally break away from that consolidation. Notice equilibrium is getting referred to within this price leg from body low to high here. And then notice how we have this imbalance here. Once we displace through equilibrium, this fair value gap is the one that gets respected. And notice how we do displace above equilibrium here, but what's the overall narrative? We want to see lower prices. We have that low resistance liquidity that was left within the market, so we're likely going to reprice there. So therefore, I'm going to be looking for these bearish PD arrays instead and filtering out these bullish PD arrays. And here we're consolidation. Smart money is accumulating shorts above that midnight open and above that 8:30 opening price. So this is a study 950 macro kind of consolidation. So whenever 950 macro consolidates, why does it keep on doing that? Whenever the 950 macro consolidates, the 1050 macro is like going to offer a nice expansion. And here we have manipulation higher up into this 1 minute imbalance right there. Notice we have a dealing range high to low, that previous consolidation, and look at 25% acts as real resistance. And then we displace, having that first stage of redistribution within a macro. And then we have the second stage redistribution also occurring within a macro. And then here we have the PM session. And the PM session was kind of a little bit, this is just generating liquidity. And then we have a smart money. We have SMT showing smart money accumulation of longs below midnight open, below true day. And then we have SMT, cracking correlation. And then we end up displacing higher. We have a fair value gap right here. We have a wick right there, probably constitute encroachment. You can map that out. Then boom, we end up repricing to this SIBI right here. And notice there's not really too much going on within lunch macro. Usually during 12 to 1:30, that's when we expect to see some form of attack on profitable stops. And here we kind of just have consolidation. And I'm sorry, I usually have the 1:30 opening price drawn out. So that's going to be right here. So here we manipulate below that 1:30 opening price, come up to here. In that imbalance, we take buy side liquidity here, shift to market structure, and then that breaker is the one that gets repriced to. Also noting this volume imbalance right here that we end up respecting. Then also from this low high to low, we have a -1 standard deviation that we end up closing off of in that market on closed macro. Other than that, those are kind of my salient annotations. Friday, why did TJIF not play out? I personally don't like to look at TJIF. I think it gets me caught up, and there has to be a rhyme and reason, a narrative for why it should play out. And today we had that larger sell side liquidity objective, and we met that around what time? I should have that time annotated here, but around 11:30, 11:30, we come up. We have another stage of redistribution. Also, how do macros engage price? Every single macro was pretty influential today. DRT levels, they act as true structural resistance and support. And then the 950 macro consolidation. When does 950 macro consolidate? And what or do we expect after that 950 macro consolidation? So that's kind of my market review. Hopefully you all have a good one, and I'll see you guys in the next one. Have a good one. I was looking just yapping that whole time. I'm still gonna post it. I do want to upload some case studies. Alright, I'm looking gonna end stream here. This is a nice little session. I'll be back for sure tomorrow and later tonight. But yeah, that's all. That's all I'm gonna be on stream. Anyways, I appreciate y'all, and I'll see y'all in the next.